Well, some good news for the Indian economy. UBS-Financial Conditions Indicator does suggest that the economic recovery momentum has continued even in the December quarter. They state that the economic conditions indicator maintained the recovery in the December quarter following a swift rebound in the September quarter, even as the pace has slowed down slightly. In fact, the reason for the economic indicator maintaining momentum is one, of course, the pent-up demand and also a delayed festive season. UBS forecasts FY21 GDP to contract somewhere around 7.5% and they state that even as the economic recovery appears to be gradually returning to the pre-COVID levels as reflected in the high-frequency indicators, services sector still continues to lag. UBS expects inflation to remain above the RBI's policy target and expect policy rates to remain lower for a longer period of time. They expect CPI inflation, in fact, to be 50 bips above the RBI's average forecast of 4.9%. In H1 FY22, they expect the central bank to keep policy rates unchanged or stable throughout FY22 and expect a substantial economic slack at this juncture and expect output gap to remain negative in FY22 as well. According to UBS, they see another room for another 25 bips rate cut coming in. However, it would be dependent either on a growth surprising sharply on the downside and or inflationary pressures moderating significantly over the coming months. According to UBS, RBI is likely to maintain surplus liquidity to support the overall government program. In fact, if you look at the short-term rates in the system, the short-term rates have remained far lower than the policy corridor, and also they do state that RBI is likely to continue with the OMO operations as well as Operation Twist to support the government's borrowing program at a time when there could be a significant slippage in revenue collections. They do state that we believe the risk of unwanted inflation due to the central bank's bond purchase is limited by the slow expansion of credit along with excess capacity in the economy. So all in all, yes, I would say some good news certainly for the Indian economy. After seeing a better than expected Q2 GDP, we are seeing that high frequency indicators are still continue to show some momentum, although sequentially the momentum is slowing down. But even in the December quarter, the economic momentum still seems to have continued. In fact, various economists also have stated that there is possibly a room for another 25 bips rate cut coming in from Reserve Bank of India. But of course, that would be dependent on how growth inflation dynamics do shape up from the current level. As of now, yes, although RBI has maintained an accommodative stance, RBI is likely to stay on a pause on rates for at least in the coming few months, and economic momentum so far in the December quarter has continued. Various economists do see the GDP for India for FY21 to contract somewhere around 7.5 to 8.5%